Hey, this is Mike, and it's Sunday, September 27th. And for today, for Sunday, since the markets are closed, obviously, I just wanted to do a watch list of stocks that I'm looking at for the month of October. So before I start looking at the stocks, I think it's important to kind of look at the market environment for October. October is usually not the best month of the year for equities. However, it's better than September. And right now, looking at the market action we got on Friday, we got a pretty good recovery from the correction that we've had in the past month. However, we're not out of the woods yet because we are below the 50-day moving average. Therefore, you just want to have a little bit of caution in October because we're still 2% below the S&P's 500's 50-day moving average. So with that in mind, just keep things in mind that if you buy these stocks in October, they may continue to go down. However, I do think in November and December we will get a powerful Santa Claus rally. So just realize that you may be accumulating stocks that are moving down. However, that you may get some nice profits towards the end of the year. So the first stock we should look at obviously is Tesla. Tesla's still down about $100 from its all-time high, which was about 498. It's sitting at 407, but it's got a lot of momentum going on, especially with Kathy Woods from ARK Investment, who poured in another $66 million into her fund, her ETF actively managed fund. And there are a lot of people who want to buy Tesla stock and the Tesla vehicle. And I think there could be a lot of momentum towards the end of the year. Tesla announced that it has a new plaid performance version of the Model S coming out with deliveries in late 2021. That's topping out at 140,000. They have the Roadster coming out, and Elon Musk has also talked about a $25,000 car like the affordable Tesla, which will be a huge game changer if and when they pull that off. So Tesla is definitely a stock that people are going to be looking at buying at the end of the year. If you don't have the money to buy shares of Tesla, or if you feel like Tesla may be a little too volatile for you, then definitely look at ARK Innovation ETF. That's Kathy Wood's ETF. She has about 12% of her portfolio invested in Tesla. So ARK Investment tends to move about 50% of the price of Tesla. So it's not as volatile as Tesla, but you still get that same price movement. And I really like ARK a lot, and I think ARK is doing well. They're still, below their highs, but I like this setup here. The setup is pretty good, and I do think ARK is going to be one of the big winners moving towards the end of the year. Another stock that I've been talking about a lot, and I think it's a stock that a lot of people should be looking at, is GameStop. GameStop was up almost 10% on Friday, but that was after a big dip that it had the day before. Right now, GameStop is setting up really well. It's, the big momentum move in here is that Ryan Cohen, the founder of Chewy, has put in a 10% stake into GameStop, and his plan is to turn GameStop into an Amazon competitor. While I don't think that's completely realistic, if GameStop is able to sort of diversify its portfolio of e-commerce offerings and be able to sell a lot more stuff, it can become like a mini Amazon. And if you look at Amazon is worth $1.6 trillion and GameStop is worth $650 million. If GameStop can become 1% of what Amazon is, that puts GameStop at a $16 billion valuation. So that's an almost 20 times return of what the stock is doing right now. And I think that would be an incredible opportunity. It's just a low risk, high return opportunity. The next stock I want to look at is Workhorse, and I think Workhorse, it's obviously an EV company, but it's focused more on the commercial side. It has a lot to gain from Nikola's imminent demise. It turns out Nikola was nothing more than vaporware. Workhorse, it's had a big run up and it's had a big fallback. However, this is another thing, a great long-term play. Workhorse has a lot of momentum. A lot of people want to buy the stock. It was up 12%. So when stocks tend to go up more than 5% over a 2-week period, they do tend to pull back. So this stock will probably most likely pull back. So with these stocks, especially a stock that's under $50, the one thing that I personally like to do are cash secured puts. So I would do personally like a cash secured put at the 23 or 22 strike, collect that premium, wait for the stock to come down so you acquire the stock at a lower price, and that allows you to have just a lower cost basis for workhorse. Now, another asset you should look at is not a stock, but obviously silver has been really badly been beaten up, and I would not buy silver for the Santa Claus rally run up. I would just accumulate it at this point because it will run up. We're going to have inflation. There's going to be, when the second wave of the pandemic hits, we're going to have a lot more stimulus. Gold and silver are going to benefit from that because we could look at this perceived dollar devaluation of all this spending that's going to have to come down the road. So I would definitely look at the iShares Silver ETF SLV. Also look at gold. But like I said, these are not stocks I expect to go up immediately. This is just something that you'll want to accumulate because 12 months from now, gold and silver will be higher than the levels that they're at right now. So that would be seen as a bargain. If you're looking at some more conservative plays, I would definitely look at the following three stocks. Definitely look at Walmart. Walmart has been beaten up, but we're going into the holiday season. A lot of people are going to be shopping at Walmart, especially if they don't have a lot of money. You could get gifts at Walmart for under 20 bucks. So Walmart is another good play from the conservative side. Another sort of conservative play is Dollar Tree. Dollar Tree is, they sell everything for $1, and Dollar Tree is a great place to get like cheap stuff that you need, like Christmas decor, if you want to get little stocking stuffers, or especially gift wrap, gift bags, stuff that you need, like the little bows that you put on the present. Those tend to be those little gift wrap items tend to be $3 or $4 at Walmart. You can get them for $1 at Dollar Tree, and also you can get cheap Christmas decor. The dollar stocks, I think, have the potential, with a relatively low PE ratio of 23, 24, they have a potential to run up. They haven't run up in a while. They've kind of been forgotten, but I do think Dollar Tree has the potential to run up really well. And then finally, one of the more conservative stocks that you may want to look at actually for the holidays, and it's kind of weird, is McDonald's. McDonald's has been running up really well. I think people may just want to get some fast food during the holidays. If you do a lot, holiday cooking, on the side for that, McDonald's has always been a great choice as a conservative stock. And I think it's just a way to sort of round out your portfolio. If you have a lot of tech stocks, you want to have some, point of sale like Walmart, your Dollar Trees, and then also McDonald's. McDonald's also does really well. And also you have to consider that its main competition, Burger King, is desperate right now. They have this Burger King, you probably heard about, they have this $2 value meal that they're going to be losing money on with every sale. Other competitors, well, they're not really competitors, but you look at Wendy's, Five Guys, they do have better food, but they just don't have the real estate that McDonald's has. McDonald's has the best real estate of any fast food restaurant. So they're going to be doing well. And also consider McDonald's has a lot of locations inside malls. Malls are going to be really busy. People go shopping. They're going to want to go to McDonald's to get something to eat. So I would definitely look at McDonald's as a stock. So altogether, that's the watch list that I'm looking at for October. That's a list of about 7 or 8 stocks. But definitely realize that October may still be another down month. I don't think it's going to be a crash, but I think it's more going to be a consolidation month. And then we're going to see a nice run up in November and December. Then after that, going into January, I would be very careful because I do think the second wave is going to hit in January, and we still may not have the election resolved. Election results is resolved by January, and that can cause some chaos for the market. So you may want to have gold and silver at that point. So, okay, I hope you enjoyed this video. If you did, please be sure to subscribe and turn on notifications, okay? Talk to you later. Thank you. Bye-bye.